Hi everyone, and welcome to Investing Strategies. It's Alissa Coram with Investors Business Daily from the NASDAQ market site in Times Square. Today we're analyzing the latest trends and developments in the technology sector. Neuberger Berman is here to break down Apple's recent product announcements and what's set to drive the business forward amid waning iPhone demand. And a closer look at the technical action for Apple provides a great example of why it's important to watch rotation in the market. That's this week's technical analysis. Plus, ProcureAM will discuss investing in space with its UFO ETF. And we'll learn about why the fund has made such a big move in recent sessions. Investing Strategies starts now. Okay, let's begin with this week's market insights. Headline risk is still a big concern in the market, with stocks facing downward pressure this week after an attack on a Saudi oil production facility over the weekend. That's adding to fears of a global slowdown. And with the two-day Fed meeting now underway, there's potential for even more market-moving headlines. But the rally is showing resilience. The NASDAQ closed off intraday lows Monday and remains above its 50-day moving average. That's a very key area to hold, so keep an eye on that. And for now, the renewed uptrend is intact, but investors should closely monitor their stocks and watch for any sell signals. And of course, if losses in heavy volume start piling up, that could weaken market conditions and warrant adjustments to your portfolio. But for now, let's turn our attention to this week's sector spotlight with a timely discussion about the tech industry from Apple to Cisco. Now, joining me for today's discussion is Daniel Flax. He's Senior Research Analyst at Neuberger Berman. Thanks so much for joining me today, Daniel.
Great to see you.
All right, so the technology sector, there's a lot going on right now between trade war headlines, antitrust. Apple just had its fall product launch, but give us sort of a top line view of some of the major themes you're seeing right now in the tech space.
Sure. I think the key secular themes around the move to the cloud, mobility, really the digitization of our society, which is going to have ramifications across a number of spheres, that remains very healthy. Clearly, the concerns around cyclical headwinds, trade, some of the friction with China, those are concerns that will take time, I think, to get resolved. So we have a juxtaposition of the secular and the cyclical, but we see opportunity here.
All right, well, namely what? Where are you seeing the opportunities?
Sure, so you mentioned Apple. We think that story is really attractive over the medium term. We saw the new phones and the camera capabilities, and I think those are important. But if we step back and just think about why this company has been so successful and why we think it can continue to be, it's really the integration of the hardware, the software, and the services to deliver a differentiated user experience that's fun, it's private, it's secure, and customers value that. So the smartphone market remains difficult in the current environment, but their install base is growing. And I think wearables, that's a very interesting area we can talk about in terms of the implications in healthcare and a bunch of other areas. So we like Apple here.
All right, yeah, let's take a look at this week's stocks to watch, starting with Apple now. IBD recently had Apple testing a new buy point. It's actually shown a lot of strength where we've seen a lot of other stocks that were really leading kind of falling and pulling back. So technically it's looking pretty strong. But let's talk a little bit about the fundamentals, because you mentioned the phone, which of course is still a very big part of the business, but sales growth was only 1% last quarter. Does that slowing growth concern you at all?
I think in the near term, the environment does remain difficult. And recall, last year they had very strong growth, and so there's a difficult compare. But if we think out over the next couple of years, if we think about the user experience, we touched on cameras, 3D sensing, that's really finding a way into people's social lives, the workplace, whatever you might be doing. We expect there to be a lot more augmented reality as part of that. And Apple's iPhone is able, it's a really important tool in terms of delivering that experience. So we like what we see. We think towards the end of next year there could be a 5G iPhone, and that could also help improve growth a little bit. But ultimately what matters here is really pulling together the different elements here. It's not just the hardware, it's not just the software, and it's not the services. It's all three of them, and that really is what helps to define the user experience.
Right, and you mentioned the 5G phones coming out. What is your take on a slowing upgrade period, people waiting longer to get new phones? Is that changing at all? I mean, obviously, with 5G coming out, that's likely going to spark a lot of upgrades.
It may. Relative to 5 or 6 years ago, the market is a little bit more mature. In some respects, the replacement cycles have been closer to PCs, which could be 3, 4, 5 years in certain cases. But I think what's important from Apple's perspective is that users are satisfied, the ecosystem is healthy, there's an opportunity for them in newer areas like services. We saw the TV and the gaming announcements. And so those are areas that are additive to what we think are interesting growth prospects over the next few years.
Right. These other elements are becoming an increasingly important part of the revenue story here. So what do you make of Apple getting into the TV game along with heavyweights like Disney? We have Netflix, which hasn't really been performing that well given this heightened competition, but I mean from every angle, whether it's a tech company or a media company, seems to really be getting into streaming.
I think that's right. I think if we look at each one of those companies, they all have different business models. So for example, specifically on Apple, they are coming from a place of where they make very good devices. But what we've seen from Apple is really them the partnering with luminaries like Oprah, like Steven Spielberg, and really trying to come up with curated content and something that helps to differentiate their ecosystem. Disney, of course, has very strong franchises. Netflix has done a terrific job in terms of creating content, and they have strong direct-to-consumer relationships. But coming back to Apple, I think it's additive to their ecosystem. We are in the very, very early stages, but we do see that as an interesting opportunity.
Right, and within their Apple Music platform, I think kind of their first dipping their toe in the water with some original content was kind of through that. Should that be, for investors, taking it all into consideration of how well or maybe lukewarm the reception might be for this new offering?
I think the company has demonstrated, and frankly a lot of technology companies, not everything is going to work in the first instance or even the second or third. What's important is whether the management teams are able to marshal the resources, bring in the right talent, experiment, innovate, learn from their mistakes. And if they're able to do that systematically, and TV I think is a good example, then they can create value for their customers, and in doing so strengthen the ecosystem, make the Apple platform, in this case, more attractive. And if they're able to do that, then that, we think, is what helps create value for all the stakeholders over the medium term.
Okay, and then pivoting back to the device side of things, you mentioned wearables. Can you talk to me about the latest developments in that space? I mean, it seems like everywhere you look now, people walking down the street are wearing the AirPods, they have their Apple Watch, so they're becoming, a part of the culture in a lot of people's lives and somewhat of a necessity, I guess almost like the iPhone, but are we at that level yet with these new devices?
Well, it appears that they can't keep up with demand, so the AirPods have been a very, very strong device or new device for them. But what's interesting, and same with the iPhone and same with the iPod, if we remember that, they're taking a category and they're redefining it, and they're changing the user experience and doing it in a way that's fashionable, that's hip, that's cool, that people want to be part of. And so the devices work very well. They're certainly easier than trying to untangle wires of traditional headphones. And the watch, of course, watches have been around for a long time, but they're bringing new capabilities to bear. So the healthcare, so for example, you have their ECG app, which enables people to take electrocardiograms. And so we saw what the company talked about last week, and we've obviously all read a lot of stories about the watch helping to save lives or alerting people or helping them to lead healthier lives. And so that, as we think about our society, is an example of something that Apple is helping to transform, raise awareness, do it in a fun, cool way that people really, really are delighted to take part in.
Right. Well, we definitely know that it's very important for Apple to continue to innovate. So I guess we'll have to see if it can start showing up in the numbers in recent quarters. But let's quickly touch on Cisco here, kind of continuing the conversation about 5G in a sense with Cisco. Tell me what you are seeing with this name in that space.
Sure. So if we think about the generations of telecom, there was 2G, 3G, 4G, and now we're embarking into the world of 5G. And one of the reasons we like Cisco, or we think it's a very interesting opportunity, is that it is an enabler of these next generation networks. And there are a lot of different elements to that. So for example, one critical element is security. So security, as we think about the world that we're in, and certainly where we're going to, is more and more important. And that's because this world of 5G, it's not just about smartphones. It's about connecting many, many more devices, the so-called Internet of Things, or IoT, and that's putting intelligence, semiconductor, software content into all sorts of objects and being able to draw information, make better decisions. And in that world, if we look at the future of cars, for example, with autonomous capabilities, security becomes more and more important. And so Cisco is a company that's really at the heart of a lot of these trends. And really you have a management team that's doing a good job embracing that. And it's doing that in the context, of course, of an uncertain global environment. Obviously, there's friction with China around trade. So we try and balance what are nearer term cyclical issues with longer term opportunities.
Right, exactly. I was going to say, because the company did gap down on its recent guidance miss. So how do you put that in the context of the larger picture here with Cisco?
Sure. I think it's a combination of being impacted by near-term trends. So for example, if deals are slower to close, as we've seen with Cisco and a whole host of other companies with exposure in particular to some of the service provider markets, some of the enterprise markets. Cisco is global, and so some of the impact in certain countries which may have slower growth absolutely will impact them. Other companies have called it out. So we appreciate the issues in the short term. We are analyzing all the data and speaking to companies constantly. And so what we are trying to distinguish between is what are near-term headwinds and what are some of the longer-term trends that we can capitalize on ultimately for our clients at the end of the day.
Right. Well, the stock is about 15% off of highs. We have it at IBD forming a base pattern, so we'll have to see if we can get some momentum from here. Daniel, thank you so much for your insights today.
Thank you.
All right. Well, after the break, we're going to take a look at Apple closer and the recent chart action for the tech giant and a lesson about paying attention to rotation in the market. Back in a minute.
Pick winning stocks with MarketSmith. Growth 250 shows you ideas with big potential. View charts packed with key data. Use pattern recognition to see action zones. MarketSmith by Investors Business Daily. Try 3 weeks for $19.95.
Okay, so when you're looking for the best stocks to buy, it's always important to keep a finger on the pulse of what's in favor on Wall Street and what's out of favor. So this week, let's go over IBD's tips for tracking rotation in the market. IBD's research shows it's key to buy top stocks from leading groups. That's how you're going to score the biggest gains. Now, for most of the year, software has been the leading sector, with many hot names from Shopify to Zscaler making incredible moves. But when the market began to sell off in August, a lot of these software names started selling off hard and pulling back, breaking support at their 50-day moving averages and even their 200-day moving averages. So just because software had been the leading group, that doesn't make it immune to falling out of favor. Now, if this happens to you, it's important to follow those sell signals. Now, a drop through the 10-week line in heavy volume is a sell signal for both long-term holders and short-term position traders. And a drop through the 200-day or 40-week line is another final long-term sell signal. Now, it's key to not get too attached to your stocks that you make excuses for why they're underperforming simply because they had been outperforming in the recent past. So with software and other growth names selling off, what we realized was happening in the market was a shift to more value style names. While stocks with high price earnings ratios have suffered serious losses, lower PE stocks have been shining. Now, the average S&P 500 PE is about 22, and Zoomies, eBay, and even Apple would be considered stocks with lower PE ratios that are showing strong action right now. However, investors should not heavily weight a low PE in their buying decisions. But just as it's key to track rotation from leading sectors, it's also key to notice this rotation away from growth and into value. And it's important to follow the moves of institutional investors because they have the power to move a stock up or down. And ultimately, it all comes down to the chart action. So let's take a look at Apple's weekly chart to explain. This is a really great example. Now, Apple formed a deep base in the Q4 2018 correction, and the depth of this base here was 39%, which is very deep. Now, typically bases with a depth of 40% or more have a higher likelihood of failing. So we weren't that surprised when Apple's attempted breakout from this base over here failed. But now Apple has formed a new, tighter base, and this one has a depth of 13%. And now let's switch over to a daily chart to show this base in more detail. Now, while many of those software names started to sell off hard in August, Apple was able to hold support near its 50-day moving average as it built this new base. And the relative strength line for Apple, that's this blue line here, it measures price performance versus the S&P 500. And although in the grand scheme of things, it's well off all-time highs, but at the start of this recent base, the relative strength line had been making short-term highs even before it broke out of the chart pattern, and that's very bullish. And Apple staged a breakout over the 221.47 buy point last week, and it's now trading just below that buy point. So if Apple can retest this entry, look for heavy volume and look for that relative strength line to continue higher. And it's also worth noting that not only is Apple outperforming those high-octane software names, but many of its big tech peers like Facebook, Amazon, Google, and even Microsoft. And while the chart action is very positive here, we do have to point out that fundamentals remain lackluster for the time being. Sales grew just 1% last quarter, and earnings are projected to decline 2% for the year. So investors should definitely keep that in mind when making a decision to buy. But all in all, with the market favoring value names, Apple is one to watch. Okay, so when we come back, ProcureAM will discuss how investors can gain exposure to the space economy with his UFO ETF. That's after the break.
This season on Cultural Capital, we are in New York City and San Francisco. Come with me as I tour some of the world's most innovative companies, from Squarespace to C3AI, Giphy, and Figma. Learn how CEOs built growing companies while maintaining the ultimate office culture on Season 3 of Cultural Capital on the brand new NASDAQ.com.
Now, earlier we discussed the massive impacts of 5G, and yet another way you can play the 5G trend is by investing in the space economy. Yes, that's right, outer space. So with me now to explain is Andrew Chanin. He's the founder and CEO of ProcureAM, which is behind the UFO ETF. Thanks so much for being here today, Andrew.
Thanks for having me.
All right, so explain to me, I think people are still trying to wrap their heads around 5G, but how can we tie 5G to the space economy?
So 5G is one of these technologies that everyone believes will be completely transformational for how individuals' everydays work and how companies are actually able to build off new businesses, be faster, more agile, and do more things. And really, when you're talking about 5G, as well as some of these other transformational technologies like cloud computing and big data, machine learning, one of these common threads is that we're seeing this massive amount of data that's being created, and 5G is about getting data from point A to point B faster. What a lot of people don't realize is how it gets from A to B. And in many cases, this data is actually being transferred using space-based systems. So think satellites and ground stations. So if people believe and are investing significantly into 5G, saying that this is going to be a technology that we're all going to be reliant upon, people might want to consider actually some of these other infrastructure plays that are actually helping to allow this transfer of data. And satellite companies are something that many people actually don't have exposure to today. So it might be something that individuals might actually want to consider if trying to play 5G.
That's right. So tell me a little bit more about the ETF in terms of the components. So clearly now we know satellite involved companies, but how are you determining the components of the ETF?
So I actually personally don't actually determine the components of the ETF. It is a passive ETF investment. So the fund actually tries to mimic the index that was created by SNet Global Indexes and their partner Micah Walter Range and his company Space Investing Services. Micah is actually a former director of the Space Foundation and has done many different things, from studying space policy as well as many of the different sciences related to outer space, and actually was developing this index prior to bringing it to us for several years. And this was an idea that I had been very interested in creating an ETF around. But prior to actually meeting Micah and seeing the work and research that he had done, it seemed that it would be difficult to kind of compile this entire theme and find all the companies that you would need in order to build an ETF around it. But after seeing all this research that Micah had done, we had felt very comfortable that this was the index that we wanted our fund to track.
Right. And so what would qualify a company to belong in this index? How much of their business has to be tied to the space industry? Because I think that's a little bit of the trouble with some of these, more fun ETFs is if you're tying them to maybe a theme that's not really a part of the core business, then what's the point?
I completely agree with that. And I've seen many ETFs in the past where it says, okay, this is this theme that the ETF is going to track. And you look at it and you say, okay, well, there are companies that are doing something in there, but you're actually not getting that much exposure to it. Or on the other side, you're saying, okay, well, I see that these companies are in this theme, but this is really just the same ETF that already exists with a fancy name on it. And for us, it was extremely important when launching our first ETF for ProcureAM to be able to actually have an index that we thought really represented the global space industry. And so when you look at the index and how it is derived, what the team did was they looked at the universe of space stocks, no pun intended, and they said, okay, we want companies that actually derive at least 80% of the index has the companies derive at least 50% of their revenues from space-related activities. So that is the pure play tranche, but also realizing that there are companies that are major players in outer space, but don't necessarily have a majority of their revenues coming from space, but they're huge players still. Think the diversified aerospace and defense companies. There is still room for up to 20% of the fund can be invested in these non-pure play names. So what you really look at when you see kind of how this index is put together is you see roughly 80% of these companies are these pure play space companies driving the majority of their revenue from space activities. So think satellite companies, manufacturers and operators, rocket manufacturers, companies that are reliant upon space-based systems. So some of these more communications companies like Dish and Sirius and things that people don't necessarily realize or think about as being space companies, but they're completely reliant upon using these space-based systems to deliver their services and products.
Interesting. So speaking of these bigger aerospace and defense companies, perhaps eventually more of their revenues will be coming from space now that the U.S. is going to have its Space Force.
It's very possible, and that is something that is one of these potential catalysts for the space industry. It's not just the U.S. that's building out actually defense and military capabilities. We already are working on many of these, and the U.S. government does work with companies like Raytheon and Lockheed and whatnot for aerospace and defense, and even the militarization of space. But you look at things like the trade war and geopolitical tensions between the U.S. and Russia and China and other countries starting to emerge, and these countries are realizing if we want to be a dominant space power, it's about building the infrastructure today. And you'll look at many of those companies countries that I just mentioned, and they're already showing their aspirations and investing into those. So, if we see trade wars pick up, it wouldn't be hard to imagine a scenario where the U.S. says, okay, we don't want to rely on Russian or Chinese or even Indian space components. We want to build everything right here in the USA or with our strongest of allies and using their their machinery and technology. And so, it's very possible that you could see countries investing even more. So we have this, the Space Command and the Space Force are things that we're building on. But certainly, China, India, Russia, France, Canada all have both military as well as commercial and governmental uses for the space economy.
All right, and looking at the ETF, what do you see in terms of the potential for other companies to be added to the index down the road and in turn the ETF?
So one of the neat things is that the index provider realizes that what is considered space today and what companies exist in the space economy and space universe right now may look completely different 5, 10, 20 years from now than is currently in the landscape. So what they've actually built into the language of the index methodology, which really is what makes the index tick, is that right now it's looking at satellite and imagery, and it's looking at satellite manufacturing and operation and rockets and things like that, and telecom. But in the future, they also mentioned that it could expand into things like space hospitality and tourism and resource exploration and extraction. I mean, some of these ideas might seem fairly far off, but a lot of the technologies that will be required in order to make those companies success are currently being developed today. So the index can reconstitute every 6 months and rebalance quarterly. So the index provider and that team is always looking at what this pool of stocks could consist of, and is constantly looking at, okay, are there new industries that space is advancing into, and should those companies be pure play enough, in large enough market cap and liquidity, they certainly could have a position in the index in the future.
Okay, and then looking quickly at the recent action of the ETF, it had a really big move last week. What do you attribute those really big gains to?
So we saw a lot of that actually in many of the satellite-related companies, and that's, again, one of those areas that very few people have exposure to, yet so many things that we do as individuals are reliant upon these satellite systems. So things like GPS, you look at, you take an Uber or a Lyft to work, or you're taking, using Google Maps to figure out how you're going to get from, your office to some meeting that you're going to. And many people don't realize that GPS is completely space-based. So I think people are getting a better understanding of what, space companies actually are and do, and how they actually affect our daily lives as individuals, let alone companies and governments. And so many satellite companies last week actually had in the week prior also had a pretty nice pickup. So I think we benefited from some of that in UFO as well.
All right, well, it's a very fascinating area of the market, so thank you so much for breaking all of this down for us. We really appreciate it, Andrew.
Thanks for having me, Ali.
All right, and thank you all for watching Investing Strategies. We'll see you right back here for our show next Monday. IBD's own Justin Nielsen will join me to discuss the market and top stocks, and we'll be getting some executive insights from Adobe. Until next time, I'm Alissa Coram.